Hello and welcome to CMC Markets Trading Outlook for the week of April the 27th, 2015. My name is Colin Szynski, Chief Market Strategist. This week our topic is U.S. GDP, FOMC, and earnings preview. There's still a lot of news coming out, primarily focused on the United States, and we could see a lot of action there over the course of the coming week in stocks, in indices, and in currencies. As we finish the week here, we have the Nasdaq breaking out to a new all-time high, and look at this. We had it trading in a channel here between about 42.80 and about 44.80. It's broken out and it's confirmed and continuing to rally. We have this confirmed here by a breakout also in the RSI, and it's not overbought yet, so there's still technical room for it to continue to climb, because it's not overbought, it's not due for a correction, and it has broken out and is showing upward momentum increasing here. So this is, let's call it a 200 points on top of that. 42.80, 44.80 measures up towards 46.80, and we're seeing even this 4,500 level, which it has cleared to has become a new support level. So very strong markets in the United States. What we want to watch for over the course of this week, as we continue to work our way through earnings season, is what we might see happen in terms of in the United States, in terms of what goes on in earnings reports, and also are we going to get breadth. So we'll look at the S&P 500 here. For an example, where it is not confirming just yet. It is so close, it's unbelievable, but look at this. It's sitting just below 2120. If it breaks out, we've got a big breakout like we've seen in the Nasdaq. If it fails, we have a treble top. But we look back here to the RSI, which is telling us that we're seeing a nice trend break here as well. And it looks as though on the RSI, the upward momentum is starting to accelerate. So keep an eye this week for a potential breakout in the S&P 500. If we do, then the next measured resistance, based on the width of a channel here of 80 points, measures up towards 2200. If we do get a breakout, with initial resistance possible in and around, say, 2150. So, and for support here, about 2110 for the S&P 500. So we'll be keeping an eye on that as we move into next week. Some of the stocks we're seeing that are really moving up, and we're starting to see tech really catch fire. And what's interesting is that this could also partly be a function of the other big thing we've got going on this week, which is the trading in the U.S. dollar and the GDP report and the FOMC meeting. We've seen a bit of a slowdown in the U.S. economy. Here on Friday, we've seen an absolutely terrible durable goods report come out. Not only was it the sixth or seventh month in a row of consistent declines, it was below zero, it was below street, and the previous month was sharply revised downwards. So durable goods not doing so good. Another sign of weakness in the U.S. economy, and we'll see how this carries through. First of all, on Wednesday to the GDP figure for the United States, and then Wednesday afternoon we get the latest Fed announcement. The Fed was not expected to start raising interest rates in April anyways. We'll look for the statement to get a feeling for is anybody still clinging to June, or are they starting to look at bumping interest rate liftoff back farther into the year. We are seeing the U.S. dollar starting to come back as some of the speculation of an early rate hike is starting to fade back out, and we're seeing a rebound in currencies. I'll talk to that later. But also, if the U.S. dollar does start to come back off, it can improve the outlook for stocks. One thing we've consistently seen across earnings season lately is a feeling that the rise in the U.S. dollar has weighed down on corporate earnings. It's finally caught up to them. We're seeing that in terms of not just in terms of exports from the U.S. becoming more expensive, but also the profits of overseas subsidiaries getting translated back to the U.S. dollar at a lower rate. And what do they do about pricing overseas as well? So there's a lot of issues with U.S. multinationals and their earnings, and the U.S. dollar rally has been a drag on earnings. So if the U.S. dollar starts to come back off as interest rate speculation fades, that could actually help corporate earnings. Now, it's probably too soon for this earnings season, but we'll be keeping an eye on that for the next earnings season. On the interim, we are still seeing a very positive response to earnings reports, and I'll just highlight a couple of examples here briefly. We've got Amazon gapped up to a new 52-week high, up 14%, almost 15% here. They actually lost money, but they lost less than the street expected. We've got Microsoft. up 9%. Look at this huge gap on the earnings, which did beat the street. Microsoft's numbers were spectacular. Really great report for them. Breaking out of a downtrend, upward gap, and next resistance in this 49 to 50 area for Microsoft. Really good move. Even Google, whose earnings report was so-so, got off to had a positive response as well. Although it's gotten up because it wasn't that great. It's gotten up to channel resistance and kind of started to falter. But we did see a positive response, at least on the open, to Google. And something significant to note, we are breaking out to new all-time highs on the Nasdaq, and certainly some of the action here is reminds me of the old days, but in reality it's very different now. There were so many companies back then that were flying high with multi-billion-dollar market caps basically on hopes and dreams and business plans, but now you've got so many companies in tech that have got real growth, real earnings, real sales, real money, and of course the one that has the most money is the one that's coming up next. On Monday after the close, we have Apple's earnings report. Apple has picked up a little bit today with the launch of the Apple Watch, and it's just bumping up against 130 here, round number and descending triangle resistance. But this is we see those staircase pattern: consolidation, rally, consolidated higher levels, rally, consolidated higher levels. This ascending triangle is a continuation pattern, suggests that we are still under accumulation. Look at this here. We were going sideways on the RSI. It's now broken up. Upward momentum starting to build in Apple. Even on the minutes charts here, we're seeing after a mid-morning slump, it started to work its way back up. If it clears 130, next resistance in and around 133.80 for Apple. I'm just going to bring it a little longer. Here we can see this staircase pattern a little bit better on Apple as we go. So after the close Monday, Apple earnings, we could see quite a bit of action in Apple stock around that as well. On Wednesday, we get Twitter, and its stock has been a little bit more mixed, and I'll just blow this up here. So we'll see. Had a fairly large decline off the IPO, then a big rebound, and for the last few months it's kind of going another correction, and it's been quietly working its way higher. So depending on what kind of a report we get, we could take another run at this previous high up near 56, or we could see it slump back. First report this here is about $50 round number and a Fibonacci level. Here's a Fibonacci cluster in the 46 to 47 range if we saw a disappointment. One concern going into the Twitter report is that we have had an overbought RSI, and it does seem to be starting to roll back a little bit, so we could be leveling off and starting to get kind of choppy in this range. This first resistance here is about 53.40. So one other stock I wanted to highlight for the coming week: on April the 30th, Tesla Motors is expected to make a big announcement related to batteries for households and businesses. The company doesn't report earnings till a little later, but they have a big event, so we could see quite a bit of interest in trading interest and action in the stock around that. Well, what have we seen? We've seen that it had been tailing off through the fall into the winter, and but recently we saw a bit of a double bottom here in the shares. This is in and around 180 to 190 range. We've got a double bottom. We had a positive divergence emerge in the RSI. That told us downward momentum was slowing. The double bottom also told us downward momentum was slowing. We're now starting to rise up back above 200, back above 210. We've broken out of this downward channel here, and it is starting to work its way higher. First resistance we'll be looking for in this 228, 230 area around these previous highs and a Fibonacci level. Support, as I said, has moved up from about 200. Is about 210. Then this is about 203, and that's about 193. So we could see Tesla Motors be quite active as well in terms of stock market action. As I said, the other big theme this week is the Fed and what's going on with the U.S. dollar, and so I wanted to highlight a few currencies because we are seeing U.S. dollar start to weaken. In fact, I'll begin with the U.S. dollar index to show what's going on here and to give some context. Here we go. So it had a big rally. It's leveled off lately, and it has in the last couple of days has started to tail off. This was about a 90, 96.80 to 100 trading channel. If it busts that, this new low here is 94.70 to the 95 area here. More importantly, the RSI has slipped back under 50, so we are seeing momentum starting to turn downward in the US dollar. So keep an eye on that. Some of the currencies we've seen take advantage of this. One was sterling. We've seen a nice turnaround here. Look at this. It had been a fairly significant downtrend. The last low down here around 145.75, not confirmed by the RSI. Positive divergence told us our downward momentum was slowing. Since then, we've seen momentum starting to turn upward. Broke 50, retested it, continued to carry higher, confirmation of an upturn in momentum for cable. It's also now broken out over 150 and retested it as new support and continued to climb. Another sign that looks like a base is in place here. This 145.75 to 150 measures up to 154.25, which is up in around here near some of these previous lows. We do have an initial Fibonacci test about 152 and another one around 155.80. But cable does look like it's trying to turn around here. The other one that's trying to pick up a little bit we're seeing is even euro dollar. And if we look here, this has been bottoming out. It's not quite a double bottom, but close. We've been going sideways, a bit of kind of an ascending triangle here of higher lows forming below resistance at 110. So we're bumping up against this 108.60 Fibonacci level. If we clear that, we could take another run at 110. If it fails, first support is here around 108, 107.90. This Fibonacci level here is in around 107. So we'll be watching Euro US dollar. A couple of things that could move Euro dollar this week. Obviously, the Fed meeting in and of itself, and the other thing we're watching is ongoing talks with Greece. Is April 30th the deadline? Is June 30th the deadline? Who knows what the real deadline is? I mean, there's been more meetings, and depending on who you talk to, some people say it was awful, some people say it was great. So it's pretty foggy here. So because of that, we could still see quite a volatility in either direction in euro dollar, depending on how things shake out. The other currencies I wanted to highlight briefly. I'll look at Aussie dollar and dollar CAD as well. Let's start and dollar yen. So let's do dollar CAD here. And we can see more weakness in the U.S. dollar. Big U.S. dollar strength as the oil price crash. Double top here, and it started to work down. That's a bit of a descending triangle, has been broken. You broke this Fibonacci level. It's near 122.90. That's become resistance, and you're starting to drop in a bit of a staircase pattern here. RSI also signaling, after you got way overbought, that the momentum has been trending downward. Similarly, also, if we now go and we take a look here at dollar yen, dollar yen, big rally within the U.S. dollar rallied, and look at this, it's leveled off. And if we want to note it here, we're seeing lower highs forming here above 118.50. That's a descending triangle, and we are seeing the RSI slipping more often than not back under 50. Suggests we are probably going. This upward momentum is kind of run out, and it's slowly but surely rolling over. So if we did break 118.50, next Fibonacci 117.85, then about 117 even. Upside rallies now appear to be contained by the 120 round number for dollar yen. So overall, we are in an environment where we are starting to see U.S. dollar weaken as this interest rate hike speculation starts to evaporate. I'll also highlight here gold and crude. We'll just look at gold briefly. Gold could be pushed in both directions. I'm thinking gold could have another neutral week. It's mixed, and the reason I say is because technically it's not looking very good here. We had this, in fact, it is starting to break down below this shoulder support here in and around 1180, and we've had it coming off from 1210 now. It is starting to break down. We are starting to see technical weakness as well here on the RSI. So this has been pointing downwards with first potential support near 1170 and next support after that around 150 and then 142. So we do have some room for some weakness here in gold. On the other side, though, we do have on the so the technical side is not looking very good, looking terrible for gold. The fundamental side is neutral to positive, and the reason I say is we still have the ECB ramping up their quantitative easing program. They're flooding the market with money. At the same time, we're still seeing negotiations with Greece. If somehow something goes awry and this the Greek situation starts to go off the rails, you could see money come back into gold. The third thing is what about the U.S. dollar and the U.S. dollar weakening because of the Fed? If we see significant weakness in the U.S. dollar, that also can boost markets that trade counter to the U.S. dollar, like gold. So we've got fundamentals telling us, well, maybe it might go up. Technicals telling us it looks like it wants to go down. So it is kind of mixed here. It's a fairly wide range if you look at 1140 up to 1220. More recently, 1180 to 1220, but it does look like it may pull back, at least initially, pull back to start the week. But there is potential for a rebound depending on what the Fed does. The next one I wanted to highlight here is crude oil, and we'll start with Brent this week because Brent has had a big breakout. And we saw here, look at this, we had a big decline, an initial bottom at a higher level, and an ascending triangle, so a pretty strong base. You could also make a case, although it's not perfect, for a cup and handle bottom, which is a big saucer bottom here, a smaller saucer bottom here, also a bullish pattern. We've got RSI trending higher, not overbought, and we've broken out over 62, completed an ascending triangle, and broke a Fibonacci level. A pretty significant breakout. Next resistance here really is maybe in here around 67.85, 70 round number, 72.50 is the next Fibonacci test. So crude oil Brent has a nice turnaround underway here. And I'll wrap with the crude oil Texas. Crude oil Texas, same kind of thing. Here was another cup with handle bottom and breakout from an ascending triangle. And in fact, this one has already gone. So this one broke out and Brent's been following it. Now, following the breakout here above 54.40, it's been hanging out between about 54.40. This is about 57.40, and this Fibonacci level is about 57.80 here. That's a 23% retracement of the big decline from last summer. We're leveling off here, but so far we're confirming this breakout. The uptrend remains intact. We did get a little overbought in the RSI, so we're probably working that off through a sideways correction rather than a pullback, and we may still see that continue to work its way through that in the coming days. But overall, some of the, by the way, on top of the main events with the U.S. GDP and FOMC, we do have GDP reports as well for Canada and Spain. There's an employment report for Germany. There's data coming out from Japan right through the week. On Friday, we do Thursday night and Friday, we do get the manufacturing PMI reports, the full month ones for countries around the world. So we should get a better feeling on how is the world economy doing coming out of the spring. We will note Friday is a holiday in continental Europe, so Friday's PMI reports are English-speaking countries, U.S., Canada, United Kingdom, and of course the Thursday night ones from Asia-Pacific countries are still on track. So the Eurozone ones and continental Europe will get on the following Monday. So we are looking at a very busy week for a number of economic reports, big week for earnings and corporate news. So it looks like it could be quite an active one for trading.